Hi, I'm Cary Stamp, founder of Cary Stamp & Company, Principled Wealth Advisors, and I'm here today with a quick tip on how to plan years in advance to make sure that you have life insurance potentially for the rest of your life. For young people, we love for them to have inexpensive term life insurance, which means you pay very little and you get a lot of coverage. You don't get any cash value, but you get a lot of life insurance for the money that you're spending. So, the first thing that I want you to understand is this. Don't buy the cheapest term insurance that you possibly can. Why? Because it probably does not have in the policy one major thing I want you to have, and that is a conversion feature. What's a conversion feature? A conversion feature allows you to take your term life insurance that's very inexpensive and convert it to a permanent life insurance policy that, yes, is going to be a lot more expensive, but it can last for the rest of your life, not just for a termed period of time. This is called a term to permanent conversion, and it's critical that you be thinking about this years in advance of when you might want to have it in place. Now, how's it work? First off, you want to ask the person selling you the insurance, does it have a conversion feature? And if it does, how long does that conversion feature last? Some policies, if it's a 10-year term or a 15-year term or 20-year, it'll last the entire term of the policy. So if you have a 20-year term, it'll last for the full 20 years. Not every single policy works that way. Sometimes they last for only 5 to 10 years. In the term of the policy could be for 20 years, which means that you need to make a decision at a fairly young age if you want to convert your term insurance policy. So if you're a 30 or a 35-year-old person, you might have to make that decision while your kids are still young, you still have a lot of expenses, and you don't have a lot of cash flow. Try to find a policy that has a conversion feature for the length of the term of the policy. Number 2, what products does the insurance company allow you to convert into? Some insurance companies will say, you can choose any of our products. You can use a universal life product that has a fixed interest rate. You can use a variable life product where you can invest in separate accounts inside of that particular policy. Or you can use an indexed product that's a universal life product as well, or even a whole life product. Number 3, what's the maximum age that conversion is allowed? Typically, it's age 65 or age 70 inside of a policy. So if you're a 55-year-old person and you're getting a 20-year term insurance policy, it's very likely that even if the policy allows conversion for the entire term of the 20-year term insurance policy, you still might have a restriction that you have to convert that policy to permanent by age 65. Watch for that one as well. Now, why would you want to do this? You got this cheap term insurance policy. You said, I'm buying this for the next 15 or 20 years. Why would you want to change it so that it becomes a permanent insurance policy? There's a number of reasons. The first is that you're going to get, probably when you're younger, a very good rating from the insurance company, because the likelihood is the younger you are, the better health you're going to be in. Number 2, you're probably going to be able to get that rating from a carrier that's a very high quality carrier, and the cheapest term insurance products generally are not going to have the best conversion options. The other thing is, you're not going to pay that much more for a policy that has a conversion option inside of it, maybe 15 or 20% more on an inexpensive insurance policy, and it'll give you a huge benefit. So here's the kicker though. If you got rated when you got your term insurance as a preferred risk, when you do the conversion, regardless of your health at that time, you get the rating when the policy was issued. So even if you're now 50 years old, maybe you're a little chubby, but when you got the policy, you were a preferred rating, and today you might not get a preferred rating, you still get the rating when you do the conversion at the rate the policy was issued. Huge upside, huge benefit. Number 2, maybe you've had a health setback in the time from the policy issuance to the time you want to do the conversion. So maybe you're 30 years old, when you're in your 40s, you got some form of cancer, and the cost of your insurance would be increasing substantially if you went out and got a new policy. Look at your term policy. See if you can do a conversion, because if it has this feature and you were preferred when it was issued, you're still preferred even after you have cancer, and there's no medical exam required to do the conversion. And the third reason is you might have another use for the policy. You might want to use this policy now as a vehicle to accumulate cash value, either for retirement or for a bequest to your children. A lot of times our clients will have their assets increase substantially as they age, and in many cases, life insurance is a great way to transfer wealth to the next generation. And if you have a term policy that we can convert to a permanent one, this could be a great solution. If you have questions, feel free to reach out. My name is Cary Stamp with Cary Stamp & Company, and this has been a Principled Wealth Moment.